Hello, sir. Hi, everyone. My name is Achal Jadhav, and my topic name is leverage. So let's start with introduction. Introduction is that key leverage is an investment strategy of using borrow money, specifically the use of various financial instrument or borrow capital to increase the potential return of an investment. Leverage can be also refers to the amount of debt a firm uses to finance assets. Then definition, the use of various financial instrument of borrow capital such as margin to increase the potential of an investment. Then next is there are four methods of leverage. The first one is leverage operating leverage, financial leverage, combined leverage, and degree of leverage. So operating leverage, what is the operating leverage? It means that fixed cost associated with the running the firm. Then that's mean operating leverage. Then financial leverage, fixed costs associated with the financing the firm. Then third one is combined leverage. It means that operating and financial they both come together. That's why here we say that combine. Here is the combination of both the leverage. Then degree of leverage, it means measure how much leverage of the firm is uses. That's why degree of leverage is here. So we are going to see the three leverage methods in detail. So first one is degree of operating leverage. Operating leverage is the ratio of company fixed to variable cost. A firm with a relatively high fixed operating cost will experience more variable operating income if sales changes. Operating leverage by using fixed operating cost, a small change in a sales revenue is magnified into a larger change in operating income. This is the small meaning of operating leverage. There is a formula, that is there is a one small ratio, that is a degree of operating leverage. It means contribution upon PBIT. Then degree of financial leverage, the use of fixed cost sources of financing debt, a preferred stock rather than variable cost sources common stock. Financial leverage by using the fixed cost financing, a small change in operating income is magnified into a large change in earnings per share. DOFL is equal to, it means that degree of financial leverage for ratio is PBIT upon PBT, and uh, here is the image of degree of financial leverage. Then what is the advantages and disadvantages of operating leverage and financial leverage? So let's see the operating leverage of advantages of operating leverage. First one is magnification of profit to shareholder. Then second one is operating efficiency, such as faster production, fewer errors, and higher quality, usually result in increasing productivity. And the disadvantage is that magnification of losses to shareholder, higher break even points, high capital cost of equipment can be illiquid. And then these are the disadvantages of operating leverage. Then next one is financial leverage, magnification of profit to shareholder. This is the one advantages of financial leverage. Then second one is lower cost of capital at low to moderate levels of financial leverage because interest expenses is tax deductible. Then disadvantages, magnification of losses to shareholder. Then second one is higher break even point. Third one is at a higher level of financial leverage, the low after tax cost of debt is offset by others effect such as bankruptcy and agencies cost. Then combined leverage by using operating leverage and financial leverage, a small change in sales is magnified into a larger change in earning per share. A degree of combined leverage, there is a formula contribution and PBIT. The next one is a difference between operating and financial leverage. What is the meaning of operating and financial? What is the main difference? The the first one is operating leverage is related to investment activity, but financial leverage is more concerned with financial matters. Okay, the fluctuation in EBIT can be predicted with the help of operating leverage. The changes of EPS means earning per share due to debt equity mix is predictable by financial leverage. Financial manager uses the operating leverage to identify the items of asset sides of balance sheet. Then the use of financial leverage is to make a decision in a liability side of the balance sheet. Then operating leverage is used to predict business risks. Financial leverage is used to analyze the financial risks. So this is the small difference between operating leverage and financial leverage. Thank you so much.